Good weekend, all. Ira Epstein of Lynn & Associates with your weekend edition of your financial market wrap-up. And this wrap-up is for Friday, the 29th of November, 2019, just after 2:15 in the afternoon. I already know I will not be in the office on Monday, so please accept that. I have a funeral to attend, and it's not going to be a nice one. So I will be doing that, and then I'll be back on Tuesday. As you can see today, the markets came down rather hard. What does it mean, though? You know, you get these thin holiday trade, you don't know what that all comes in at. You were down 228 points in the Brent. You were down 268 points in the crude WTI. Gasoline down 7 points, and you can see where you're at in bonds and notes. Grains were not open today, so keep that in the back of your mind. But thin holiday trade, but you always pay attention to it. And you have to understand, you get to these thin days, and markets move like that. Now, obviously, where the market is concerned in the financial market is, number one, what happens now that President Trump did sign the bill sent to him by Congress on human rights in Hong Kong. What happens with OPEC? That's one of the things going on here, as there's big troubles brewing in the cartel, as a lot of members don't want to go for further cuts. They might extend what they have in place till June, but additional cuts, they don't seem likely. So what OPEC has to do is get members that have been, I'll call it, lax in meeting their production quota cuts to get up to snuff. When we take a look at a monthly area chart of closes and you're just on the S&P, it's hard to argue. You're at all-time highs, and for the month, you're finishing off nicely 108 points higher. When you go to a weekly area chart of closes, you were up 32 points for the week. That's solid, another record high close. When you take a look at a weekly bar chart, you see how the market zoomed. Now, one of the things that's been happening is the FOMO. I don't want to be left out of the trade. That's what we call it, the FOMO. And when that happens, people are just blindly buying. You always got to be careful of that in markets. We're also going to be heading right now into the December time frame. It's often also a strong period. So the breaks in the market, I'm going to be looking for the seasonality to be strong in them. You can see how the chart action has just been a runaway. One of the things that gives you how strong it's been, and you saw this happen in these rallies, you're not seeing lower lows. Here, after this break low, you don't have any of the lines where you got a lower low coming in. So the market has just been zooming, if you will, to the upside from a 28.55 level, and here you are now at 31.43, about 300 points higher. That's rather dramatic. When you take a look at where you're at in relation to all the key averages, you're over all of them. So a bull market, yeah. Where's the resistance? You've been running on it, the upper Bollinger Band. It keeps containing the market on the ups that we're getting. So it's staying right to the right-hand side of it. That's as bullish as you get, and momentum has been bullish. Plain out, when the market breaks, it breaks. But at this point in time, trying to pin it, why to pin it? No. I'd be more of the school of thought that on pullbacks, the market's still going to see good buying. I see that in the NASDAQ. It's the same pattern. We don't have one lower low week for months. So the market gets to that upper Bollinger Band, gets over it, pulls back to it, and why? Because 95% of that time, the market will stay under the band the way that the algorithm is built. It is still a resistance point. You can see it, and there's a big following for it. The bigger the following, the more likely the market pays attention to it. Momentum up, bias up, trend up. Dow, trend up with the swing line, higher lows, higher highs into the upper Bollinger Band, momentum up at the same time. And even the Russell decided to join the party. Welcome aboard. Higher lows, higher highs. Do you see the difference in the pattern, though? You've had your break lows here. I can come to these other markets, shorter term one in the Dow, and then you get into the long term where you didn't take out a previous week's low. That is what I'm getting at. In the VIX, it just keeps continuing to sink back. The weekly, the cash VIX, is just sitting here at 1355. Momentum still down, trend down, and it just keeps moving itself to those lower levels. When we get to the note market, you had a pattern of a higher high, but now with this week's action, I can argue you've got lower highs, lower lows. You're back into the downtrend. The bias is down as the market settled right now underneath let's just see, it's 129.28 is the 18-week average, 129.09, that's bearish, and momentum is sideways to lower. Support comes in around 127.31, resistance 129.28, and the trend would reverse itself back to the upside if you were to get over 130.02.5. In TLT, the market had a big break, found some support, and went back to fighting a battle now at the 18-week moving average of closes, but the trend remains down. Lower highs, lower lows. If you take out this week's low, the swing line will move from this number all the way there. But right now, the battle's at that 18-week average. In the dollar index, the trend is up. You have higher lows, higher highs, you're over the 18-week average, and momentum's pointing higher. That gets nullified if you get under 97.55, but because you have the higher high here, even if you just fell straight down and took that out, you wouldn't have a downtrend. You'd have a higher high, lower low. Support, 97.98 is where I think the pros will try to support it. It's the flip-flop of that in the euro currency with lower highs, lower lows. The first target, 109.53, the lower Bollinger Band. In the past, when it's hit that number, even though the market's gradually worked itself lower, it has paid attention to it. So I always look to see, do markets like to go to Bollinger Bands? If they do, what happens? You can see how they play with themselves there. That is not a buy signal when you hit it. It might be a signal for the bears to take some money off the table. In the Mexican peso, as you can see, we're down. Now, this gets to be an interesting trade because the House is supposedly going to take up the USMCA bill this month of December. We'll see if they give the president any type of a win. The fact that the president did sign that Hong Kong bill, maybe that gets him a few points. On the other hand, dealing with China just got a bit rougher for us. In the meantime, higher lows, higher highs, but under the 18-week average. I'm going to call it neutral there, and momentum pointing down. So the chart, it's disjointed. It's not sitting there with everything working together right now. Canadian dollar, still in the bear camp, even with knowing that that bill's coming forward. Lower highs, lower lows, trend down until you take out the 75.81.5 zone. Resistance, 75.61.25. Momentum still pointing down. Japanese yen. Difficult chart here. Got the lower low, and because of this day that I'm pointing at, all the way back here, this higher high, it leaves me confused as to where the market might go. See, once you take out that week's low, the whole chart gets, if you will, becomes what I call an ugly chart. I've used that term here many times. Having created this indicator, I know it takes a while to straighten out, and that's where you're at. Supports the 100-week average, which you're at this point. Under that's the Bollinger Band. The bias is down, but the swing line is in trending. In Bitcoin, well, on the weekly chart, you came back up from the thralls of death at $6,500 and finished up at $7,780. I mean, that's pretty wild swings. On the daily charts, I was telling traders, be careful, because when you got to those lower bands, you could get a bounce. You're getting it. What do we have in the way of a trend? A higher high, lower low. So it's a bounce away from the Bollinger Band. First fighting battle's the 100-week average at 74.16. You cut right through that. That puts 92.18 as a possible number where it's going to fight more of a battle. In the differential between Brent and WTI crude, look at how this has gone from $5 all the way out to the $7 mark. I find that fairly fascinating. I'm looking at the months I've got the right ones there, so that's where that moved out. In the weekly bar chart, you can see how you went up, challenged the upper Bollinger Band, and boy, you came screaming back down. I showed you that the Feb contracts were down rather dramatically. You're still dealing here with the expiring of the DISAs and so on. In the WTI crude, up to the upper Bollinger Band, that's where I look for the pros to, if you will, cut back if they're long their positions. Now you're falling back to the 18-day average of closes, actually closed under it. The last break low we had was 54.76, so you've got a higher highs in place, higher lows. Take that number out and you end that trend, so I'd be paying attention there. Gasoline, down 840 points for the week. That's one heck of a drop. The fight on the longer term chart has been at the 18-week average. You see it there. It's crystal clear, and that's where the battleground has been. In the heating oil, the market, while it's down hard and finished off at 187.75 under the 18-week average, it's just week after week hitting this 18-week average and not going anywhere. I don't see a trend to trade off of that particular market. Interesting time, for sure. And you might be questioning your own trade selections. Now, I'm going to be doing something this week for you. If you decide to buy 1 year worth of any of my subscriptions, it could be this one, the video, whatever it is, I am going to throw in on the Cyber Week. Next week, it's going to start. So if you buy this weekend, it's fine. I will honor it. My charting course, $179.95 value. So you buy 1 year's worth of any of my different research products. That's my Cyber Monday week that I'm going to go with. But what I do in the mornings, as you all know, I put out a video, and I typically cover 40 futures charts, 5 ETFs. From there, what I do is give you my specific trade ideas. Buy here, sell there, do this. But I'm also bringing you up to date on what's going on in Asia and Europe. And these recordings are out before 7 a.m. Central Time. So it's plenty of time for just about everybody as you're waking up to get the feel of what the markets are doing. It's certainly ahead of when the stock market opens itself, even though the futures are open. In this particular video, this one goes for $7.95 for an intro. If you buy a 1 year, it's $156 to give you the example, and I'm giving you the $179.95 charting course. Go on the website, you can see that. So, hope you might want to take advantage of it. How do you do this? All you need to do is go to our website. Under the word research, you will see the different programs that we have. Take a look at them. You can sign up that way. Click here too. I realize that the wording's not out for it yet. It won't be because I won't be in the office Monday. When I tell you I'll honor it, I'll honor it. I'm Ira Epstein. You have a great weekend, and I will see you all come Tuesday.